So here we just went over 10.2, which was subject, but does have in relations to what happens when you are dealing with cash, especially when you're dealing with your receivables, okay? So what happens is what a bank reconciliation does is it makes sure that your cash register account matches the exact bank statement, okay? So that's what we're going to be looking into today. So again, when we're doing a bank reconciliation, right, we know that every single month you're going to either receive some form of statement that's going to be a list of all the transactions, and it basically tells you what you received, what checks have cleared, what interest you've accumulated, any fees that the bank has charged you for using their services. So again, we want to make sure that with the bank statement and the bank reconciliation that we know where our money is at all times. Okay, so businesses should reconcile their bank statements to their cash register to ensure all of the transactions go through properly. Okay, so for example, if you've let me see, if you write a check, right, sometimes it doesn't clear right away, right, because it takes, maybe it takes 3 to 5 business days to send that letter with a check in it, right? Also, it's also dependent on the person that's receiving the check. Did they deposit it right away? If they didn't, they held on to it and they're waiting like 2 months later to deposit it, then you're going to be your job is to make sure that that person received the money and that they are going to deposit it, because therefore you can then see in your bank statement that how much money you actually truly have in your actual account. So again, this is a typical looking of what a check is, and again, it has to require the check account number, the person you're paying to, the date, and everything, right? Now you can also write dates in advance. That's the cool thing. So if you send out the check to them and you tell them, no, it's not ready until next week, you can't deposit until next week, then they're gonna have to wait till that happens. Okay, so again, when you're sending out checks, make sure that these things are that you make sure that you're aware of the date and how much you're actually paying the person for. Okay. So we're going to be introducing you to the check register. Okay. So what a check register is pretty much a small synopsis or a little summary of all the transactions that you've done dealing with your checking with your checkbook system. Yes, good. Not checking account, checkbook system. Okay. So, for example, if you're pretty old school, when you write a check, you have this little book on top, right? It allows you to write the information. Oh, you wrote a check out for this number. Who did you pay it to? For how much amount and what was the date for, right? That right there is a physical check register, right? It allows you to keep track of your checks, and that's it, okay? All right, so that it basically keeps a track record of all the checks that you have written, okay? Second thing I want to ask you to also be looking at is a bank statement. So what the bank statement should typically look like, right, is you're going to have your bank name at the top. I don't know what bank it is, but whatever it's called, it's up there. You're gonna obviously, first thing you're gonna have is what is your original bank account statement in the beginning of the month or at the end of the previous month. Okay, so you know what you started with. And then you're going to have the statement date at the end of the month, which is your ending period. So it tells you what you started with and it tells you what you ended with, okay? And it's going to give you a list of all your transactions, right? Here you have all of your checks that you've written. Here you have all the deposits that you put all your cash deposits in. And here at the top right, you have all the service charges that the bank charged you for doing business. So for example, I used them to print out my payroll checks, right? You can do that. You can go use the bank, but they are going to charge you a service charge for that. Okay? And if for any reason a check has been bounced or a customer has wrote you a bad check, they also will charge you for that because they need to because they assume that you are receiving money but nothing happened. Therefore, they're going to charge you because of their labor work. Okay? They said that what I put all my effort to try to make this money work for you and it bounced back. So they're going to charge you a fee right there. Okay? So obviously not all the fees apply to every single bank, but this is just a typical one that we normally see. So okay, and then at the bottom is going to be interest, and ACH is also known as auto clearinghouse. So if you have like a savings account, usually they'll charge you an interest for that, or they'll increase your interest for that, so you earn it. Another one that we use auto clearinghouse is if you are in the business of doing online transactions, right? Let's say you do electronic fund transfers. That's what EFT stands for. Then the auto clearinghouse is what you get to charge the extra customer for using the application. So for example, what is it, Venmo? If you've heard of Venmo, it's an application where you can send money to other people, right? A lot of people use it as a way of business, right? But if you use your credit card, they charge you an additional on top of the amount you owe to use that service. So this is the same thing. On Auto Clearinghouse is going to charge you for any electronic transfer funds that you do with other businesses. So this is money that you get to collect on top of their payment. Okay? And then understanding what an NSF is. NSF means non-sufficient funds. So again, if you wrote a check for a large amount and you did not have enough money in your bank, you will get charged an NSF fee. Okay, so again, that's the same thing as over withdrawing, right? If the minute you over withdraw in your bank, boom, you're gonna get automatically charged money if you don't put that money back. Okay, within I don't know. I think every bank is different, but for my bank, it's if you don't return that money within 24 hours, boom, you get charged. And for every day you don't do it, you get charged again. So yes. So again, that's the same thing for an NSF check. Now, what if it's a really small amount? What the bank will do is they'll go ahead and process the check for you, but they will charge you the NSF fee on top of the money that you owe, on top of the money that they went ahead and paid for you. So, yes, so those are just fees and things that you need to know when you're dealing with the bank statement, okay? Next thing, the last thing I'm going to introduce to you is called the check register, okay? So again, when we go ahead and dive into the actual Coffee Cafe project, which should happen in a little less than 4 weeks, I would say, maybe 3 weeks from now, because you have 2 weeks is good. You're going to be your exam. We got 1 more week of lecture and then straight into the class project. So with that, okay, so where does this cash ledger come from? It comes from the general ledger. And what the cash ledger does, it is a summary of every transaction that is dealing with your bank, and it lets you know how much you have in your bank account. Okay, so this is your account balance right here. Okay, so for any check that you have written, it's going to deduct from your checking. For any deposit that you've made, it's going to increase your checking, and XYZ. Okay, Typically, those would be the things that you would see in a cash ledger or a check ledger. Same thing, cashing, checking, whatever it is. It's going to keep track of all your transactions, whether you wrote a check or whether you deposited money. Okay? So, yes. So let's go ahead and dive into what a bank reconciliation does. So what the bank reconciliation does is you are comparing and contrasting your actual bank statement, so things that have actually been validated and been cleared, and you're going to compare it to your cash register, cash ledger, whatever you want to call it. Okay? The significance and the importance about this is in your books, you may have recorded, I wrote all these checks, right? But given the theory of those checks, right, depending on who the vendor is or whoever's receiving your check, did they deposit in the bank? And if they did, then it should show up on your bank statement. So therefore, that's another terms of, did your checks clear? Okay. So for in our books, we assume that all those money that we wrote has been taken out already. But the bank says no, that's not true. It did not clear right away. Okay? Same thing with cash deposits, right? You may deposit money into the bank, but it doesn't show up until the next day. If it's a weekend, normally banks don't really process, especially on a Sunday. If you submitted money on Saturday at 10 o'clock at night into the bank, you made a deposit for cash, right? You deposit $500. That's not going to show up in your bank account. Maybe Sunday, but not and it could be possibly on Monday. Now, oftentimes what you're going to also see is national holidays come into play. The bank system does not work on national holidays. So if you're writing a check on July 4th, that person the bank is definitely not going to process that until after July 4th. Okay? So you have to be careful when you write your checks, okay? Now, given that notion and things like that, of course, with the new technology these days, if you do a cash deposit, usually it should show up in your bank almost immediately. Now, again, but if you actually go inside the bank and make an actual proper deposit, what's going to happen is, let's say I made $2,000 deposit inside the bank, right? They're not going to let you do that outside. What's going to happen is it's on your bank's, on your application, whatever, if you keep track of it, it's only going to show that you have $100 available, right? The whole amount did not process completely. So you have to understand that when you make a deposit, when you write a check, it takes time for the bank to recognize it. Okay? Now, on the bank side, right, the bank is doing all the work for you. And by the bank doing all the work for you, there's bank charges, and there's things like service charges, okay? There's also, let's say you didn't know you wrote a faulty check. You have a bunch of fees, right? You withdraw too much money, right? You will not know that. But the bank knows that. And the bank it tells you right there on the bank statement that, well, you wrote this check and now I'm charging you money for it. So what you need to do is you need to update your cash register to validate that charge so then that you and the bank are equal and on the same page. Okay, same thing with interest. I had like 20 electronic transfer accounts, so therefore I accrued some interest. Now, I'm not going to know that. I'm just going to know that the money that just came in, that my customer paid me. But what I don't know is I didn't know that I actually accrued, 2% interest off of that money. Okay, so on the bank statement, it will show it. And what you're going to do is you're going to update your cash ledger to reflect the same things on the bank statement. Okay, so therefore, at the end of the day, your bank statement and your cash ledger should match 100%. Okay? So let's go ahead and do this small example here. Okay, so the three things that I showed you earlier, those are what we're going to be looking at. Now, I want to give you a little brief little rundown so this makes it easier for you to understand. When you're dealing with the bank reconciliation, you're being broken down to adjusting your bank statement, and you're going to be adjusting your cash ledger. Okay? So in this case, when I'm dealing with my bank statement, I need to recognize for a couple things. I'm going to start off with my ending balance. So my ending balance between the bank and my cash ledger should be different, okay? They're different. What I'm going to recognize is, and if I look at my bank statement and I recognize that there is a if there's a deposit that has not been cleared yet, then I need to make sure I adjust my bank to include that deposit, because it's going to happen. Okay? And then I'm going to also subtract any checks that I've written that have not cleared yet. Okay? So for this one, I'm going to add back my deposits in transit, so money that I'm depositing in. I need to add that back into my bank. And I need to also be aware of the checks that have not cleared yet. So we call that outstanding checks. You wrote the check, but it has not cleared through the bank. So therefore, you should have more money in your bank than what is written in your check register. So I need to subtract all of my my outstanding checks. So again, on the bank side, the first thing you do is you're going to have your ending balance, okay? You're going to add the deposits in transit, so meaning, let's say I have $2,000 $2,000 deposit, right? I need to add that to my ending balance, okay? And then I need to subtract my outstanding checks. And then I should get an amount at the bottom, okay? When I get an amount at the bottom, that's my adjusted ending balance, okay? When I'm dealing with the cash ledger, okay, again, I'm going to start off my ending balance, and what I'm going to record is, was there interest I accrued and earned by just doing business in general, like by using my bank account? Did I accrue any interest? What has the bank recorded that I don't know is in my cash ledger? So did I increase my amount with interest I've collected, right? That's income that you've earned, okay? And I'm going to subtract out the fees that I got charged for using my bank as a service, okay? And then at the end of the day, your ending balance should match at all times. So again, let's go ahead and look at this example real quick, okay? So here is my bank statement. So here, if I look carefully, my ending balance here is going to be $9,446.40. So that's the first thing I'm going to be writing in here, okay? Now the next thing I'm going to do is I'm going to compare from my bank statement to my I'm going to be ledger. Yes, my cash ledger, right? This is my my deposits, right? I'm going to verify which deposits actually went through in the bank. Okay, so here I'm going to look, okay? The dates don't matter because again, when you make your deposits, it takes time for the bank to clear it out. So here I'm going to look at my deposit slip numbers. I have 421, 422, 423, 424, 425, 426, and 427. And I'm going to look in my bank. Here, I recognize 421 is here. I recognize 422, 423, 424, 425, and 426 is my last one. My 427 is not there. Okay? So that means my bank has not cleared out that total amount yet because I decided to deposit it at the end of the month. Okay? So now I'm going to look at my deposit for 427. I deposited $254.52. Okay? So when I do that, I'm going to go in my bank side and I'm going to say, I'm going to add that in there. Okay? Because I know that this amount of money is going to eventually clear in. Okay? So here I'm going to add that money to my ending balance. Okay? Now the next step is I'm going to see which checks have actually cleared out in my bank system. So again, now I'm at my check register and I noticed that I wrote 2, 4, 6, 8, 9 checks. And if I look here, I have 2, 4, 6 checks written. Wait, 2, 4, 6, 8, 9 checks, right? And I have 2, 4, 6. So I only have 6 checks that cleared. That means I have 3 checks missing in my bank statement. So 3 checks have not been posted, meaning therefore I either wrote it too late or the person that I sent the check to hasn't deposited in their bank yet. Okay? So that means I have outstanding checks written. Okay? So let's go ahead and verify which checks I'm missing. I got 25, 26, 27, 28, 29. So again, 25, 26, 27, 28, 29. Good. I'm missing 130 because the next check I see here is 131. Okay? And it ends there. So here, I know that I'm missing check number 130. I'm missing check number 132. And I'm missing check number 133. And if I look carefully, that's for $846, $1,000, and then I have my $245. Okay, so those 3 checks, they haven't cleared yet. Yes. So therefore, I need to subtract that amount from my bank because those checks will eventually clear. And here, this is what I did. So I made the total. I added each check here, and I made the total on the left side. On the right side. Okay, so the left column, I made each check number, and then on the right side of column, I made a total. So now I need to do my calculations. I need to take my $9,446 that I started with, so that's my ending balance. I'm going to add $254, and then I'm going to subtract $2,216, and I should get a total of $7,483 in my bank. Okay?
Okay.
Now, once I've solved for that, now my next target I need to do is I need to update my cash ledger. Okay? So again, to update my cash ledger, I'm going to go ahead and find my number, my ending balance. As you look at this chart of accounts here, my cash ledger, my balance on May 30th, if we look right here, after we wrote this check for 130, the check number 133, my new balance should be $7,338. Okay?
Yes.
So with that, as we can see, in my bank, I'm still outstanding $9,000. But in my cash ledger, I only have $7,000. Okay? So that's what I'm going to start off with in my ledger. Okay? Now the first,
Shouldn't the adjusted balance be the same as the ledger start off?
no, only the beginning balance. The ending balance are different. Okay? When we get to the adjusted amount, this has to be equal. And if it's not equal, you messed up somewhere. Okay? So here, I'm going to start off with $7,338. Okay? Now I need to add my interest. Okay, so let's go ahead and solve for interest. So again, my interest is going to be at the bottom of my statement. It will tell me that I've collected interest for $15 and my auto clearinghouse was for $215. So I had a lot of money transferred in, and from that, I collected $215 from just using electronic transfer. Now I'm going to go ahead and add that in there. So my interest was for $15 and my auto clearinghouse was for $215, which gives me a grand total of $230. All right. Now the next thing I need to look at is my bank fees, right? I need to update because my bank charged me and I didn't know that. Let's see how much they charged me for. So again, here I recognize at the top of my bank statement on the right side that I got charged for service $50 just for having a bank account at this bank. They charged me $50 for just doing service for me. Okay? And then I had a return check fee. So that means I wrote something and I had it returned. So therefore, because a customer wrote something bad for me, they charged me an additional fee because the check was returned. So I got charged $35 for that reason. Okay? So I'm going to go ahead and add and put this down here. So I have my service charge for $50 and my return check fee for $35, giving me a grand total of $85. Okay? So following the guides right here, you're adding and you're subtracting. So I'm going to start off with my balance of $7,338. I'm going to add $230 because this is interest I've earned. This is money that I've accumulated. And then this is money I need to take away because I need to pay for these charges. So so I'm going to start with 7,338. I'm going to add my 230 and I'm going to subtract my $85. And at the end of the day, it should be equal to 7,482. And the number one thing that needs to happen is at the end of the day, your bank statement should match your cash ledger. And if they do not, then you have a missing item on here. Okay? So that is it for it. Now, I just told you a whole bunch of things. So what I've created is a mnemonic device for you to help remember this. Okay? When we're dealing with our bank reconciliation, you want to remember that if you're dealing with your bank first, you're going to do. Okay? What is due? You're going to deposit your bank. It's going to be your deposits in transit, and your O is going to be your outstanding checks. Okay? So again, when you're dealing with your bank side, you're going to be doing. Okay? You're going to be doing. Do. If you're dealing with your cash side, you're going to be doing ifs. You're going to be having ifs. So do's and ifs. Okay? So what the ifs is for cash is you're going to calculate all your interest and you're going to calculate all your fees. Okay? So again, for this little example here, I started out with $350 in my bank, and here I started $525 in my cash. Okay? Again, if I do my dues for the bank, I added $500 and I subtracted $250. Therefore, I have $600 balance. Okay? If I'm dealing with my cash ledger, I deal with my ifs, and my ifs are interest, okay, which is I add 150, and then I got to pay my fees, which cost me $75. So in total, I have $600 in balance, okay? And again, number one rule is your bank statement adjustment balance should match your cash ledger adjusted balance, okay? And then lastly, we talked about time value of money. So making sure that you understand what these components are for each one. So we dealt with the principal, which was your original investment, the rate amount for your interest, the time it takes for you to collect all that interest, and again, N is going to be the number of times compounded, okay? So again, here are the formulas for simple interest. You got PRT, which is for your interest for simple, and you got your FV equals P plus I, which is your principal plus your interest. And then here, for your compound interest, here's the formula there. And then for Excel, I've also included the Excel computation, which is down there. I think my screen's a little small, but it's there. It's P times parentheses 1 plus parentheses R divided by N parentheses caret parentheses N times T. Okay? So this is what I meant by you're going to have this information for you to be able to do your exam. Okay? So those are the things that we learned today. Again, this one is meant for when you need to update your cash ledger. Okay? All right. Any questions?